I'm Jeremy Podger. I'm a global equities manager at Fidelity, and I've been managing global portfolios since 1990. Well, in 2017, global equities have actually been very well supported by corporate earnings growth. And that's really the first time in 5 years, after 5 years effectively of very stagnant corporate profit growth in dollar terms. So looking ahead to 2018, what we really need is further corporate profit growth to support equity markets. And at the moment, the consensus does expect that. And I think we have a very good chance of seeing decent earnings growth, albeit at a slower rate than 2017. There's a lot of scope for surprise in 2018. And I think actually one of the most surprising things about 2017 is that markets have been very calm and very steady and have trended up in a very gentle way over the course of the year. What we could see, obviously, is more geopolitical uncertainty, and that is terribly difficult for us to predict. And on the other end of the scale, that I think there is some potential for a surprise in terms of rising inflation. And at the moment, inflationary pressures seem under control, but that could change if economies get too hot over the course of the next 12 months. Looking at the regions, I think Japan is an interesting one. This market's still well below the levels it was back in 1989. But it has recently hit a 20-year high. Earnings growth in that market is expected to be about 20% this year and is expected to slow very sharply next year, but still be positive. I think there's potential that Japan surprises profitably and that we get another leg up in that market. So that'll be an interesting one to watch. In 2017, we've found most of the good new opportunities coming outside the US. So we've seen within global funds the US weighting gradually coming down. Now, going into 2018, we're going to continue to concentrate on opportunities in 3 categories: corporate change, which will be driven, for example, by merger and acquisition activity, which I think will still remain pretty vibrant next year. Secondly, exceptional value opportunities, where recently particularly we've found opportunities in emerging markets and Japan particularly. And thirdly, in those growth companies, where we have certainly emphasized technology recently, and I think we continue to favor that. But I think more opportunities are likely to come in the second line stocks and away from some of the headline grabbing big cap stocks, which I think in 2018 might be more risky places.